are here today to help us talk about different kinds of smart. And I don't know, is it fair to say, I don't know, should we start with this Jeff Bezos quote?
Yeah,
I don't want to
do
say,
it.
I don't know if this inspired you to write this story.
Yes.
Oh, then let's start with the inspiration.
Yes.
It's a little photo that Jeff Bezos took that, no, I'm kidding. That's not the inspiration for the article you wrote. Sorry. And Morgan writes over at thecollaborativefund.com. So if you want to read more, he's an awesome writer. And I would say that even if you weren't here. So, all right. The inspirational quote we have for you today comes from Jeff Bezos. The older I get, the more I realize how many kinds of smart there are. There are a lot of kinds of smart. There are a lot of kinds of stupid, too. So today we're going to talk about 5 different kinds of smart. You're like, yes, let's do this. All right, the first one is accepting that your field is no more important or influential to other people's decisions than dozens of other fields, pushing you to spend your time connecting the dots between your expertise and other disciplines.
I think this is especially true in investing, where kind of the core of investing is not necessarily like, can you become a master of finance? Can you memorize all the formulas? Investing is just like the study of how people behave with money. And since this is a study about behavior, there's all these other fields out that have nothing to do with investing that are critically important to learning those fields that help you become a better investor. Mm-hmm. Psychology and sociology and history and all these things that you might think like, why would I study sociology to help me become a better investor? But I mean, there's a lot of lessons in there that help you think about, or help teach you how people think about risk, how people think about opportunity, how people run with the herd and don't want to be left out of the herd. Those are all very relevant topics to investing. So I think if you take a more multidisciplinary approach to your learning, it's true in I think most fields, but I definitely think it's very meaningful in investing.
It's a very liberal arts degree approach to investing.
I think that's right, yeah. And you'll see this a lot. A lot of the best investors, Warren Buffett, Howard Marks, Charlie Munger is probably the most common example. Even when they're writing and speaking about investing, they're very often doing it through the lens of something completely unrelated. Mm-hmm. Because their skill that's made them great investors is they understand how people make decisions around risk and opportunity, and that's what investing is. And a lot of those skills have nothing to do with finance per se. You
even see that a lot just in Warren Buffett's writing. Like he's always using analogies and metaphors, and often Munger's are special hug related, but you see that a lot in their writing, which is just a good writing, is telling stories. And there is some little, whenever I nail a metaphor or come up with a good connection to help me explain something, there's like a little spark of joy in my brain where I'm like, yes.
You start connecting the dots.
I connected some dots. This is going to help me understand this better because it's totally different, but it makes sense.
It starts to make sense, yeah.
It does. All right, next one. A barbell personality with confidence on one side and paranoia on the other, willing to make bold moves, but always within the context of making survival the top priority.
And this is like the difference between getting rich and staying rich, like we were talking about earlier. It's to get rich, you need to be able to swing for the fences and take risk and do something different, kind of step away from the herd. But staying rich requires conservatism and a level of pessimism and a level of not wanting to take a risk so that you can keep what you've gained. And that like conflicting or barbell personality is rare. This is why you have a lot of particularly like traders who will make a huge fortune and then lose it all at some other time because they have the personality that will let them get rich, but not the personality that will let them stay rich. And if you become a billionaire in investing or your businesses, those people are not the kind of by and large, don't have the personality that's going to let them say, okay, now that I've made $1 billion, I'm going to put it all in treasury bonds. If they had that mentality, they would not have become a billionaire in the first place.
Right.
And that's why there's so much turnover on the Forbes richest American list. The kind of personality that helps you get to the billionaire list is also the kind of personality that's going to push you off it very quickly.
Number 3. Understanding that Ken Burns is more popular than history textbooks because facts don't have any meaning unless people pay attention to them and people pay attention to, and remember, good stories.
Yeah, I think it's obvious that there are people in your workplace or that you know who have the right answers and have great ideas but can't articulate them very well. And because of that, people in the workplace and whatnot don't pay as much attention to them as people who may have a less right answer, an answer that's not as good as the others, but if they can articulate it very well and tell a great story about it, that's what people cling to.
Right.
And I think it's important for all jobs to realize that. I think something I realized a couple of years ago is basically every job, no matter what you do, is sales. Because even if you're not a salesman per se, you're trying to convince your coworkers and your clients and your customers and your boss, you're trying to convince them that your decision was right. And that requires a level of storytelling and just being clear and crisp about what you're saying that I think often goes unnoticed by people who think that because they have the common type of smarts of just high IQ, high SAT scores, that they can calculate the right answer. And because it's the right answer, people will pay attention to it. Whereas you have to be able to communicate that in a way that people find interesting and will cling to.
I enjoy reading about history. So I've read about the Civil War. We live in Virginia, so you can go to all kinds of Civil War sites. But I think 90% of what I remember about the Civil War is from the Ken Burns series.
It's so good.
It's so good.
So good.
It's so good, but it's so true. It just kind of burns it into your brain.
Yeah.
No pun intended.
Yeah. Yeah. Well, here at the Motley Fool, since I'm also my other job here is doing PR and often helping train fools to do interviews and stuff like that. And so I have like a series that I put people through, and most of that series is about how to be a compelling person on TV or on camera or up front speaking. Just tell stories.
Yeah.
Like just tell a story, one story after another. And Tom and David Gardner, founders of Motley Fool, they're great public
masters.
speakers.
Yep.
And if you listen to them, all they do is tell the same 50 stories over and over again. And they're great stories. And one time I talked to David, and David is like, it would be fun. David Gardner, he's like, this is so David. He's like, it would be fun if sometime I just went to, had every one of my stories, because he keeps them secure somewhere. If I numbered every one of them, and then I just went and spoke publicly, and I told them to just pick 3 numbers. And then I would tell whatever those random stories were. And he's like, and it would probably make a pretty good speech. It would probably work.
Roll the dice. Which one are you doing today?
Right. Well, I did this the other day. David loves these little randomized things. So he'll randomize his to-do list. And so I enumerated my to-do list, rolled the dice to figure out which thing on my list I should do. That thing I got from David.
Yeah, and he's like, I should randomize a speech one day. But it's true, and people walk away from those. Often when you have people who tell these moving stories help because they evoke emotions, they make you emotional, and as much as we like to tell ourselves we make decisions based on logic, we really make decisions based on emotion and then spend our time trying to back it up with logic. Right. But I mean, I am a firm believer that storytelling is one of the most important things you can do. And it takes, like, it's easier to create a PowerPoint slide that's got 4 bullet points, right? It's easier to be like, this is what I want you to know, boom, boom, boom. But people will walk away not remembering. They won't feel moved. They won't feel, so I'm firm believer in the power of storytelling. All right, next way you can be smart. Humility, not in the idea that you could be wrong, but given how little of the world you've experienced, you are likely wrong, especially in knowing how other people think and make decisions.
Yeah, it's just this idea that people's view of the world is heavily influenced and guided by their own unique personal past. The generation that they're born into, the country that they were raised in, just where they went to school. A lot of these things are completely outside of your control and are completely different from person to person. And what I've experienced as someone my age in the United States, as an investor, let's say, completely different than someone who grew up in Germany in the 1940s. Like, do you think we're going to have the same view about how the stock market works or how the economy works? It's completely different. One of the areas we saw this in was the last decade when gold as an investment became very popular. As a central bank was printing a lot of money after the financial crisis, the generation it was most popular with by far were the baby boomers. And I think a lot of the reason that is because baby boomers came of age in the 70s and 80s when inflation was double digits. Whereas my generation has never experienced significant inflation ever. So we were looking at the baby boomers panicking about this coming inflation. And I think my generation couldn't really understand why they were so worried. But if you are a baby boomer who remembers gas lines and remembers 15% inflation, you just had a different life experience that other generations who didn't experience that couldn't really understand. And I think that idea, that example, like, applies to millions of different things. Like, everyone's definition of risk is just rooted in what they've experienced. And so if you can realize that your personal experiences is just a tiny fraction of what else has happened, what other people have experienced, and what is going to influence the decisions of other people, I think that's a really important thing to do, but it's incredibly hard to do. Yeah,
it is, because it's so, like, in my experience, I've never, like, you can't imagine anything outside of your own experience unless you're open to listening to other people and what they've gone through.
Right.
So it can be easy to dismiss other people's experiences. The fifth and final way that people can be smart is convincing yourself and others to forego instant gratification, often through strategic distraction.
Yeah, especially in investing, but a lot of things. if your competitive advantage, if you think your competitive advantage is I'm smarter than everyone else, particularly in investing, the answer is almost always no, you're not. Especially the combined average intelligence of millions of other people, they're always going to be smarter than you. So then it's like, what is your competitive advantage? And I truly think that the only one that individual investors can practice in real time as a competitive advantage is to have a longer time horizon than other people. It's not easy. It's still incredibly difficult. But I think if you can use patience as your competitive advantage, and like I said in the article, have ways to distract yourself if you're not looking at your portfolio, just setting up your situation as an investor to keep yourself distracted from being tempted to make short-term decisions. I think that's one of the only ways that people can have an advantage over the average investor. And if you want to call that smarts, then that's what it is.
Right.
And I was looking at that. My first thought was not investing as much as saving, right?
Yeah.
Not spending as much, because you got to get something in your account before you can worry about investing it. And you, in your article, you brought up the classic marshmallow test, which we've all heard of, but you used the example of how the kids would come up with all kinds of ways to distract themselves from the marshmallow so they wouldn't eat it.
Yeah, so the kids in the famous marshmallow test were the kids who could delay their gratification and not eat the marshmallow, ended up doing better in life than the kids who just took it right away. And the kids who didn't take the marshmallow right away, it wasn't that they sat there staring at the marshmallow and exercised self-control. They played with their shoelaces and hid under the table. They were distracting themselves. And it's very difficult if you're a child or an adult staring at the marshmallow, staring at your brokerage account, following the market all day, and assuming that you're going to stare at it and still exercise self-control. It's very, very difficult to do. Much easier to just not buy the cookies and not have them on your counter than it is to stare at the cookies and assume you're not going to take them.
So get a hobby to distract you.
Get a hobby.
Get a good hobby.
Go hang out. Go for a walk. Play with your family.
All right, Morgan, do you have any closing thoughts for our listeners about how to be smart?
Just be smarter.
Just do it. I know, that's a tough question. I'm just looking for you to put a bow on this.
Just don't be so stupid.